The organic cleaning services and products financial model is suitable for businesses which provide cleaning products and services in an organic way. This has been designed to do a 60-month financial forecast for the business. The key components of this financial model are input sheet, revenue analysis, income statement, balance sheet, cash flow statement, supporting schedules, financial analysis, and the dashboard. Moving on to the input sheet, here we've got all the key assumptions of a business, starting from the company start date to funding assumptions to revenue and cost assumptions, and then capital and operational expenditure assumptions. Here we can see that if we change the inputs of the sheet, the calculations will automatically update themselves. For example, if I change the inflation rate from 3.50 to 5%, all the calculations will update themselves on their own. Then moving on to the employee compensation assumptions. Here we've got the employee compensation assumptions and their average monthly compensation. Then we've got the other assumptions, for example, working capital assumptions. Moving on to the revenue analysis, here we've got the customer estimates, which tells that at what percentage the customers are increasing each year, and then the revenue estimates that at what percentage the revenue has been increasing each year, and lastly the cost of sales. Then moving on to the income statement. So the income statement has all the key components from revenue from the services and the products, then cost of sales, along with operational expenses, and lastly the net profit. Then moving on to the balance sheet. The balance sheet contains all the key components, for example, the total number of assets with the bifurcation of current and non-current assets, the total liabilities with the bifurcation of current and non-current liabilities, and lastly the total equity. Then moving on to the cash flow statement with all the key components, starting from cash flow from operations, then cash flow from investing, and lastly the cash flow from financing. And then we've got the net cash closing balances. Then we've got the supporting schedules, which have been calculated in order to figure out all the calculations for the key financial statements, starting from the employee compensation balances and their department-wise bifurcation, then operational expenses and their department-wise bifurcation, then depreciation schedule, moving on to the loan schedules with all of its key components, and lastly the working capital and their changes and their key components. Then we've got the financial analysis, which include the valuation of the company with the calculation of WACC and the debt and the equity weightage. The NPV has also been calculated over here after discounting the cash flows over the WACC. Then we have the sensitivity analysis for the three scenarios: actual, optimistic, and the pessimistic scenario. Then moving on to the KPIs and ratios. Here we've got the three main ratios like profitability ratios, liquidity ratios, and the solvency ratios. Lastly, we've got the dashboard with all the key components at the front. For example, gross profit margin, net profit margin, revenue growth, net present value, internal rate of return, and expected equity, along with some graphical representations of customer analysis, revenue breakdown, cost breakdown, profitability analysis, and the cash flow analysis. Thank you so much.